Hello, traders. It's 8:02 a.m. Chicago time on Tuesday, the 27th of November, 2018. Thanks for joining me again for another prep session, pre-market. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. A couple things happened yesterday after the close. Right after the close, President Trump had made some indications about China tariffs, stating that it's unlikely that he'll accept another delay request by China on tariffs, and that nothing will be exempt, that tariffs will apply across the board, specifically singling out iPhones not being exempt as they were last time from the 10% tax hike. Tariff hike there. So we saw a reaction in Apple. We saw the markets drop very quickly right after the close and stabilize in the overnight session. And then we saw, this is in the indices, and then we saw them come right back up to where, so I'll go over the review, but it's just pay attention to your news feed. This morning, there was a news release that stated that the China Foreign Ministry, this was at about 1:30 a.m. Central, 2:30 a.m. Eastern, Trump and Xi to reach mutual beneficial agreements, refers to the November 1st call, and that they'll be meeting at the G20 summit on November 30th. The market spiked up pretty strong. Put in a high in the ES, 2684 and a quarter. Again, I'll review in a minute. But overall, just whipping around in the overnight session. We'll look at that. Current sentiment, the dollar just got a good push higher, trading at 97.05.5, up 0.08%. The sentiment is really risk off. With the NASDAQ getting hit by 31.5 points, or 0.5%. Crude oil's also off about 0.5%, down 26 cents at 51.37. Really a risk off, but not seeing a strong allocation to the cable, gold, the euro, the bonds, the yen, the 10-year note. The leader this morning is the Euro Bund, the German 10-year note, basically up 20 ticks or 0.12%. So even though we're pulling money out of stocks here, out of risk, it's not looking like it's pushing the safety assets much. 10-year notes are unchanged on the session right now. So that's where we stand at the moment. Let's take a look at what's ahead. This morning, just now, I believe Case Shiller was released or was set to be released. Yes, Case Shiller was just released. And then at 9 o'clock, well, this is confusing. At 9 o'clock Central, 10 Eastern, we get consumer confidence for November, expecting 135.9, prior's 137.9. And that's it for the session. We do have ECB speakers. We have ECB speaker Nui at 10 Eastern. We have ECB speaker Mersch at 11 Eastern. And we have Fed speaker Bostic, Evans, George, and yeah, I think that's those three on a panel at 2:30. Not really expecting any surprises there. These Fed speakers are not pushing the market around, as the market's already aware of what to expect. Let's take a look at our review. Vámonos. There we go. Yesterday, the primary expectation is for a dip down below the prior day's low before the market makes a run for the high to stabilize in the middle for a balanced day. The secondary scenario is basically what has worked out is to push lower and then to take out the prior high to continue one time framing higher. Although I was optimistic with the target, it ended up getting back to half mid of the gap of the 20th of November. We'll look at that here. This is what we see. Yesterday, pretty orderly open. The opening swing is about 5 points. Very clean, clear opening swing in value, in range and value. And then we extend the opening swing high up. This is where I start to say to the folks at Convergent that we want to stay off the shorts here. We're likely to continue to push into the 71.25, and that's basically what it did. It made a beeline for 71.75, took out the high by a couple ticks, and then pulled back to the mid, consolidate, makes another attempt, and then the next rotation was expected that if we break below, we are likely to shoot for those who are here and listening, 26.48.25. So we got the break, pull back. We have the range extension down. We broke the IB to the downside, but didn't quite have it in it to push another 4 points to close the gap or to touch the naked close from last Wednesday before it starts to rotate up. We get a test of the mid again, small pullback, and then we get this strong impulse higher to new highs at 26.74, and then we hold high and tight into the close. Overall, you can see here the profile yet again is just this kind of really choppy, non-balanced formation. I mean, it's really not pretty. The day before, last Wednesday, this is a trace of what it looks like. It's nothing like a P-shaped profile, a B-shaped profile, a balanced with a skew, or a completely balanced profile. What we're getting is boxy kind of profiles. And why is this important? Why do we care about the shape? The shape tells us the level of participation or the quality of the participation up and down the line, up and down these prices. Are we accepting these prices? Are we fighting? What we're doing here is we're fighting to discover value. We're seeing the participants in here are seeing a reason to participate throughout the range, throughout the price range. There's no consensus. This is likely to continue its discovery process. The market's not stabilizing just yet, even though I'll show you in a minute. Over the last 3 days, we've been overlapping. Yesterday's high is right at the mid of the 20th of November's gap. This was the target as we pushed through the mid to the high side. I'd made a comment that if it breaks higher, we're likely to grind our way to 76.25, and this is what grinding our way to 76.25 looks like. It pretty much worked by a tick. We ended up closing. The expectation is we would close higher, expected a neutral extreme close, and now that we broke the bottom, and we ended up closing somewhere in the IB. So neutral day yet again. So neutral and neutral. The point of control was shifted up. Prices, higher highs. So we have one-time framing up continuing. We still battled this gap zone, and in the overnight session pushed to 26.84.25 on the China news. Again, at 1:30 Central, 2:30 Eastern, and currently trading against the point of control at 26.61. This point of control shifted down. That's yesterday's recap. This morning, so we close at 26.69. We open in a gap. Somewhere in here, President Trump talked about tariffs and the unlikely probability that there would be some sort of a concession. and then we push lower, and then we spend the entire Asian session recovering back to the close. Remember, the close 26.69. We come back to 26.69.50, pretty orderly, pull back to mid, and then the China news kicks in right there. Gives us a 20 points spike, and we return to the scene of the crime very quickly, test higher, and then we're holding steady. What is this profile telling us? This profile is saying we have some long liquidation potential here. We've had long liquidation overnight. We have tested higher and are settling at the low. Okay, is that true? That was a trick. It is not a long liquidation profile. Just because it looks like a B shape does not make it a long liquidation profile. A long liquidation profile starts higher, moves quickly down, and then balances for the rest of the session to give us the B shape. What this is a completely balanced profile with a spike in it that makes it look like a B. Again, that was a trick question. Trick comment, really. There was no question. So this profile here really isn't a B shape. It is completely balanced, but the overnight session is in balance. We are essentially holding, if you take out the spike, we are essentially holding in the middle of the range. So if we project this mid forward, we would have a mid VWAP and point of control right on top of each other in balance. Okay, and so with volume being a little bit higher, yesterday's volume was perfectly in line with what we would consider to be the mode for a daily profile for an RTH session. So pretty normal participation yesterday. The volume over the last 20 days was off by about 25-30% for the session. The volume overnight there's a lot of it that went off right in this China announcement, but overall we're seeing a pretty lazy overnight session with a balanced profile. Let's forget this happened. This is just news. Let's forget it happened. We have basically mid VWAP and the point of control on top of each other right here, with the market really failing to get away from the low. So what do we have? We have a double bottom at 26.55 and a quarter. This is a weak low. This is just a picture perfect weak low. The expectation is for the market to try to rise higher, but ultimately to break down. Okay, that's what this market is telling me currently. Sorry about the trick question, but people tend to accept things the way they're drawn or created by their charting package rather than thinking about what it's actually saying. So here we are. These are daily bars. This is a composite chart of the pit session only. This is what I was talking about. We have dropped, pulled back, dropped through. We have this gap that we tackled the mid of yesterday. We've pushed down, and what we've done is we've walked up higher lows, higher highs, especially higher lows, and so we are one time framing up. We're one time framing up, and it looks to me like we're likely to spill over and start to make our move down to 26 into the 2603 potential area down here, down at this low here. Probable revisit over the next few days. Okay. So that's what things look like. What are we expecting for today? I want to take a quick moment here before we go over our expectations for today. For those of you who are Convergent Trading members, convergenttrading.com, it's really important that you heed this message. Please take a moment and go to this URL and fill out the consent form so that your subscription can be updated and migrated. We are getting Trade the News, live news squawk, and analytics included in your membership. just a complete blockbuster deal, but make sure your consent form is signed by November 28th to make for a smooth transition by December 1st. Please take care of this. Otherwise, it creates a big hassle for all of us. Okay, so bit.ly, bit.ly/news upgrade, and that is case sensitive. Okay, just needed to get that out there. All right, so it is the deal of the century. You're getting Trade the News, which is $185 per month, included in your membership as a Convergent member, so that you can trade more like a prop trader, because I don't think I've ever traded without news. So the primary expectation today, we're right at the low volume node at 2662. The primary expectation today is for an open that makes an attempt to push higher, as high as 2669. And then I'm expecting an impulse down. I'm expecting the overnight low to be taken out. I'm expecting yesterday's low to be taken out. A nice little trip down into 2644.50, 2648 and a quarter, of course, and then 2644.50. There's a naked close from last Wednesday. I'm expecting this to move down into 2644.50 and then potentially push up into the close. But I'm looking for this one-time framing up to end. For this one-time framing to end. I'm sorry, hang on. One-time framing to end. My bias is to the short side. My strong bias is to the short side. I'm waiting to see how that works out. Okay, so I'm going to look for the quality of the move up, and I'm doing that. Oh, the wrong screen. I'm doing that by looking at, well, hang on. Let's move this over here. I'm looking at how is it walking as it pushes higher on the open. What are the quality of the prints? Is it getting absorbed like we see here and here? Or do we see that the buyers are making quick strides to higher prices on little effort? If so, I back off of scenario number 1 and look to scenario number 2. Again, open, walk up, impulse down, look for the break of the prior day's low, look for the one-time framing down to up to end, and I'm looking for it to walk its way to 2644 from approximately 2664 before the bounce. Okay, into the close. So that's the primary scenario. Secondary. Wow, my voice is just going. Secondary scenario, open, walk down, get to the overnight low, make an attempt at this yesterday's low, push up, potentially 1 ticket or 2 ticket, push up, consolidate in the middle, and then start walking back into the 2673 area before it consolidates and gets back into this gap zone yet again from yesterday. Not as likely, but I'm ready for that. I'm ready for that play if it does show up. Okay, I'm not going to draw the third and fourth because they are kind of self-explanatory. We are opening in range, just slightly out of value, or in range in value. So expect a grind up or a grind down from there. But I'm really looking for what happens as it pushes higher. What is the quality? So it's really important for me to watch. In the first 20 minutes trading, it's really important for me to watch and see what is the quality of the movement by buyers. Because if I'm looking to get short, that's who I need to watch, right? That's who I need to protect against. So I want to select a spot to get short if I'm executing scenario 1 that gives me maximum protection. In other words, I'm looking for a spot where it would take buyers, based on the action that they've taken from the open to the point where I'm executing, I'm looking for buyers to have to do a lot of work to push into my stop. I want them to work hard to take me out. I don't mind getting taken out, but I'd like to see that they're working very hard. If we open and we just scream up, on a thin run, very little, this is what that might look like. Kind of like this. It'll be thin like that. It'll be kind of thin. You're seeing double digits, and it's just buyers are making quick strides as prices move higher. If we see that, then I'm not so interested in the short side. Okay. But if it's moving up on a lot of absorption, you can see there's a lot of volume going off. These green and red bars are just getting fat. As it pushes into my stock zone, that's an area I'm willing to participate in because I can see that there's a lot of effort being made in order to gain ground on the way up. That's the difference. That's how I read order flow, and that's how I, try to get my best, get my entry against the tightest stop that I can find. I'm not looking for more information. I'm just looking for a price that gets me in where there has to be a lot of effort by the opposing force, the force I'm trading against, to push through. This is why you don't buy a falling market. You don't sell a spiking market or a rallying market, because a rallying market's already indicated to you that it's not having a hard time getting higher prices. So the idea that you're going to sell because it's pushing into some sort of resistance, just point blank, just like that, doesn't make any sense to me at all. Doesn't make any sense to me at all. Because if the market's rallying and you're selling against it, it's already telling you that buyers' efforts are being paid off with higher prices without too much difficulty. So why are you selling? So that type of thinking is what you get when you're looking at order flow. Good luck, and I'll catch you tomorrow. Take care. Don't forget, if you're a Convergent member, don't forget to sign your form. Okay? Here it is again.